Since the release of ChatGPT in late 2022, the investing world has been gripped in an AI mania. The single largest beneficiary has been the GPU maker Nvidia, which has seen its market capitalization surge to over $3 trillion at the peak. But in terms of percentage gains, there's one company that has benefited even more from the AI hype. At its peak earlier this year, a company called SuperMicro Computer saw its share price surge almost 6,000% compared to 2019 levels. That's even more than Nvidia. SuperMicro makes advanced server computers, which it sells to data centers and other large enterprises. They sell dedicated AI servers, which include Nvidia GPUs. In fact, SuperMicro is one of Nvidia's biggest customers. With demand for AI workloads having surged in recent years, so too has demand for SuperMicro's servers. To call them an AI beneficiary would be an understatement. In the 12 months ended June 2024, they generated $15 billion of revenue. This is almost 3 times higher than the $5.2 billion they made in the 12 months ended June 2022. In that same period, their operating profit increased from $335 million to almost $1.3 billion. With their revenue and profits soaring, it's perhaps unsurprising that their share price has done well. At the beginning of 2022, the company's market cap was about $2 billion. At the peak in March of 2024, this had increased to more than $60 billion. Everything looked to be going well for the company. But then, in August of this year, the famous short-selling firm Hindenburg released a short report, accusing the company of accounting manipulation, sibling self-dealing, and sanctions evasion. In this video, we'll take a deep dive into how SuperMicro became one of the biggest AI beneficiaries. Then we'll unpack the allegations in the Hindenburg short report, and see what this means for the company going forward. SuperMicro Computer was founded in San Jose, California in 1993 by Charles Liang, who immigrated to the US from Taiwan. SuperMicro makes large servers which it sells to data centers. They don't build their own microchips or other components. They are instead in the business of designing and assembling the finished product. For example, they might buy GPUs from Nvidia, CPUs from Intel, memory from Micron, etc. They take all of these components and assemble them into a massive server. A data center company can buy a finished server from SuperMicro. Some of their manufacturing is done at their facilities in California. Some are outsourced to Taiwan. To this end, they have a massive industrial and manufacturing park in Taiwan. Before SuperMicro, the server industry was dominated by Hewlett-Packard and Dell. SuperMicro differentiated itself by being more nimble than the big guys. They released new products as fast as possible. For example, if AMD released a new server CPU or Nvidia released a new GPU, SuperMicro would start assembling new servers with these new chips as quickly as possible. They had a simple and efficient corporate structure, allowing them to approve and start shipping new products very quickly. By comparison, HP and Dell were burdened with layers of corporate bureaucracy, which delayed the release of new products. While the lack of bureaucracy allowed SuperMicro to move fast, it also created haphazard decision-making, which sometimes got the company into trouble. In 2006, they had to pay a $150,000 fine to the Department of Commerce after they were found to have exported motherboards to an Iranian customer. This was in violation of US export controls. Charles Liang said that the company was still young at the time and didn't understand all the regulations they had to follow. After the settlement with the Department of Commerce, they put in place internal processes to make sure they comply with relevant regulations. In 2007, they listed their shares on the Nasdaq. Being a publicly traded company brought a whole new set of regulatory requirements and scrutiny that the company frankly wasn't prepared for. In 2018, the Nasdaq suspended trading of SuperMicro's stock after the company failed to file their annual report. Some accounting issues had come to light, and SuperMicro's auditor was not willing to sign off on their financial statements. They were delisted, and the stock price collapsed from $40 all the way down to $13. It continued to trade on the over-the-counter markets throughout 2019. They hired a new CFO and got their act together. They were finally able to produce audited financial statements, and they relisted on the Nasdaq in early 2020. So what were the accounting issues that caused the delisting? The SEC found that between 2015 and 2017, SuperMicro engaged in a number of accounting manipulations to inflate their reported revenue and profits. When the company was on track to miss revenue expectations in a given quarter, they would prematurely recognize revenue. For example, a customer might have ordered some servers but doesn't want to take delivery until next quarter. SuperMicro would ship the server to a third-party storage company until it could be delivered to the end customer. SuperMicro would book this revenue as soon as they shipped the product to the storage warehouse. Under GAAP accounting rules, they should have waited until the product was delivered to the end customer. In other cases, they would ship the product to the customer before the agreed-upon date. This often resulted in unhappy customers. These were large, expensive servers. When SuperMicro shipped it to the customer a month early, they often didn't have anywhere to store them. so they would reject the delivery and send it back to SuperMicro. SuperMicro would nonetheless recognize the revenue contemporaneously. Separately, if they couldn't finish building a product by the end of the quarter, they would send the incomplete product to the customer anyway. They knew the customer would return it and they would have to make repairs. They nonetheless recognized the revenue when they shipped the unfinished product. Between 2015 and 2017, SuperMicro used these and similar gimmicks to prematurely recognize $45 million of revenue. The root cause of all these accounting issues was overly aggressive revenue and profit targets set by senior management. The company failed to establish a culture of compliance and control. Many lower-level employees lacked the training to know how to account for things properly. Senior management wasn't in the weeds doing any of these manipulations themselves. They instead created a culture where mid-level managers felt pressured to deliver quarterly results, and the company lacked adequate safeguards to make sure that everything was above board. To be clear, SuperMicro is a legit company. All of their customers and revenue were real. They just did a little bit of manipulation and shifted things around to meet quarterly targets. In 2020, they paid $17.5 million of fines as part of a settlement with the SEC. Fast forward to 2022, the release of ChatGPT caused massive excitement about generative AI. Established tech giants and startups alike wanted to build and run their own large language models. The core piece of technology that enables the training of large AI models is GPUs made by NVIDIA. But you can't just buy a bunch of GPUs and start running AI. The GPUs must be put into a server, which includes a CPU, memory, storage, motherboard, power supply, and dozens of other components necessary for the computer to run. SuperMicro got to work, and within a very short period of time, they released new servers containing the latest and greatest NVIDIA GPUs. There was a huge demand for SuperMicro's servers, which provided a quick-to-deploy AI computing solution. Throughout 2022, SuperMicro's revenue exploded. In the most recent quarter ended May 2024, the company's revenue surged to $5.3 billion. This is more than double the year-ago period. SuperMicro's two biggest competitors, Dell and Hewlett-Packard Enterprise, failed to see a similar benefit. In fact, both companies' revenue actually declined slightly in 2023. Remember that SuperMicro's main strength is its speed to market with new products. They were able to release new AI-focused servers very quickly after the launch of ChatGPT. This gave them a first-mover advantage, allowing them to massively increase their market share, while Dell and HPE had not yet released similar products. Being a massive AI beneficiary, SuperMicro's stock became extremely popular on Wall Street. At the beginning of 2022, SuperMicro's market cap was around $2 billion. At its peak in March of 2024, it had surpassed $60 billion. This made it one of the best performing stocks in the entire stock market. But it wasn't all good news. In August of 2024, the famous short-selling firm Hindenburg Research published a report accusing the company of accounting manipulation, sibling self-dealing, and sanctions evasion. One of Hindenburg's main criticisms revolves around related party transactions. SuperMicro works with two related party suppliers, Abelcom and CompuWare. Both are based in Taiwan and run by the brothers of SuperMicro's founder and CEO, Charles Liang. Abelcom is run by Steve Liang, and CompuWare is run by Bill Liang. Both Abelcom and CompuWare are co-located in SuperMicro's sprawling industrial campus in Taiwan. Abelcom makes server chassis, which it sells to SuperMicro. A server chassis is basically an empty box that the server components can be put into. CompuWare produces power supplies, which it also sells to SuperMicro. Over the past 3 years, SuperMicro has paid almost $1 billion to Abelcom and CompuWare. Substantially all of Abelcom and CompuWare's revenue comes from SuperMicro. You can almost think of SuperMicro, Abelcom, and CompuWare as one giant family business. Hindenburg fears that SuperMicro may be paying Abelcom and CompuWare above market prices. However, the terms of the trade between the three companies are not disclosed, so we have no way of knowing this for sure. Secondly, Hindenburg claims that SuperMicro doesn't take corporate governance seriously. After their accounting issues were exposed in 2018, they fired their CFO and a number of other people who were responsible. The CFO was a man named Howard Hideshime. According to his LinkedIn, he started working as a consultant for Abelcom in May of 2023. Abelcom is one of the related party suppliers run by Charles Liang's brother. One might even say that Hideshime was hired back into the family business. To say that this is unusual is an understatement. Hideshime was disgraced as a finance professional. Why would Abelcom possibly need his consulting services? In 2024, a former SuperMicro executive named Bob Luong sued the company, alleging whistleblower retaliation. He alleges that even after the SEC settlement in 2020, the company continued to improperly recognize revenue and engage in other accounting gimmicks. He made multiple complaints to the CEO and HR. Instead of addressing his concerns, they fired him. The allegations made by Bob Luang, as well as the strange rehiring of the disgraced CFO, gives the impression that SuperMicro still isn't taking corporate governance seriously. Hindenburg alleges that the company is continuing to improperly recognize revenue to this day. In February of 2024, an AI computing startup called Lambda Labs raised $320 million at a $1.5 billion valuation. According to Bloomberg, SuperMicro participated in this funding round. Lambda Labs is a cloud computing company. They operate data centers that house NVIDIA GPUs. AI startups can rent computing power from Lambda's data centers to run AI workloads. According to Hindenburg, Lambda is a major customer of SuperMicro. It's always concerning when a company invests money into its customers, as this can give the appearance of round-tripping. SuperMicro is possibly giving money to Lambda Labs with the expectation that some of this money will come back to them, which they can recognize as revenue. Hindenburg alleges that SuperMicro has sold hundreds of millions of dollars worth of servers and other computer equipment to Russian customers since 2022. If true, this would be a violation of US export controls. After the war began, SuperMicro indeed stopped all sales to Russian customers directly. Hindenburg alleges that they continue to sell products to middlemen in Turkey, China, and the UAE, who re-export them to Russia. The only real evidence for this is from a data firm called TradePark, which keeps track of import and export records. We don't know how reliable TradePark's data is, and to be clear, the US government has never accused SuperMicro of violating Russian export controls. Even if some of their products ended up in Russia, SuperMicro isn't necessarily liable. At this point, there's no proof that SuperMicro intentionally sold products to middlemen who they knew would re-export restricted products to Russia. The amount of product that allegedly ended up in Russia is relatively small. According to TradePark's data, approximately $210 million worth of SuperMicro's products entered Russia between 2022 and 2024. During this same period, SuperMicro generated $24 billion of revenue, so it's less than 1%. Finally, Hindenburg alleges that SuperMicro's first mover advantage in AI is coming to an end. Remember that one of their main competitive advantages is speed to market. Once ChatGPT was released and the AI frenzy kicked off, SuperMicro quickly released new models of server that were designed specifically for AI workloads. This allowed them to gain massive market share in 2023. Recently, Dell released a number of dedicated AI servers, which also performed very well. In the most recent quarter, Dell's Infrastructure Solutions segment, which includes AI servers, increased almost 40% compared to the year-ago period. This may indicate that SuperMicro's first mover advantage is dissipating. While the historical accounting issues and related party transactions are certainly concerning, the Hindenburg report fails to provide any smoking gun evidence of fraud. It's undoubtedly true that SuperMicro was a first mover in the AI server market. This has benefited them tremendously over the past 2 years. Regardless of Hindenburg's allegations, it's unclear how much longer the current AI investment boom will last. Tech giants and startups are collectively spending tens upon tens of billions of dollars to build out AI infrastructure, with SuperMicro being one of the primary beneficiaries. This level of spending is clearly unsustainable. The AI infrastructure spending is ultimately being supported by venture capital-backed AI startups, almost all of which are still losing money. Even ChatGPT maker OpenAI is believed to be in the red. Eventually, the venture capitalists will run out of money, and the AI investment boom will come back down to earth. When this happens, demand for SuperMicro servers could collapse just as quickly as it exploded. Alright guys, that wraps it up for this video. What do you think about SuperMicro Computer? Let us know in the comments section below. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.